Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So wouldn't you know it, the market went down. Market is down about 0.6% today, and it feels like the sky's falling. If you're on Twitter, if you're in the blogosphere, everyone's like, what's causing this huge sell-off and blah, blah, blah. And it really is just a huge overreaction anytime the market ticks down now, because we've been conditioned in 2013 for the market to go up every single day. Even if we hadn't had much power to the upside recently, we've just seen a trickle higher. They say never short a dull market, but when you have something that was as dull as it was yesterday, you had volume that was lower than the half day of Christmas Eve, last Christmas Eve, then anything can happen. You have that thin of a tape. Any sort of institutional size that comes in that sells anything is going to push the tape down. So, yeah, they say never short a dull market, but if a dull market starts going down, then maybe you flip the script a little bit. Anyways, the cause for the sell-off today is being attributed to more talk about QE tapering potentially in September. You had all different Fed governors coming out and giving their opinions on what's going to cause the Fed to either taper QE or extend QE or whatever. So you keep getting all these mixed signals from all these different Fed governors about what they're going to do, and it's hard to even get a grasp on whether there is a unified message from that group of people. And maybe that's the purpose, is that you have a large group of people, they debate monetary policy and they come to some sort of consensus based on the rationale of a lot of different people. But it seems like the Fed just keeps throwing out all these mixed signals, and it's hard to even get a pulse on what may happen. But anyways, that was the focus today of the headlines, is all this QE tapering talk again. And we could get more of that type of action, more of those type of headlines throughout August. You combine a thin tape with headlines about QE tapering and blah, 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 you're going to get some choppy type action. We could get some down days like this. We could get snapbacks depending on the rhetoric. But we go ahead and take a look at the chart of the S&P. You can see here we had this little down bar today. You're looking at your short-term charts, and because the range has been so small recently, you see a big down day like this when you're looking at a 5-minute, a 10-minute chart. You go to a 60-minute chart, even daily charts, and it looks like a big move, but it was really just, like I said, about a 0.6% loss today in the S&P, closed right around its 8-day moving average, so nothing really to cause alarm there. Just something to take note of. Again, there's things out there people are pointing to as potential reasons to lighten up, like QE tapering in September, the potential for a terrorist attack, all this headlines that have been going on about potential Al-Qaeda threats, blah, blah, blah. That's not something you can worry about as a trader and investor. Obviously, you got to be ready for anything, but trading off the headlines is never going to get you anywhere. You have to trade like you're in a vacuum a little bit, and if you're able to, be ready to respond to quick stimuli like things like that. But for now, there's nothing on longer time frames to cause alarm or cause you to abandon your long-term strategy. On a short-term time frame, as Scott has been harping on, sometimes less is more when you get into the August months, especially when you're waiting on a big announcement like the September Fed rate decision. Sometimes sitting on your hands, even though it's a little bit hard to do and you want to try to make money and you want to have something to do in the markets, it's better to sit on your hands a little bit more. But that being said, another thing we keep harping on is the fact that while the broader markets have been quiet, earnings season this season, as well as just various headlines that have come through on individual stocks, have provided a lot of volatility and opportunity that are tradable if you are skilled and you are prepared to attack those type of opportunities. So the meat of earnings season, they say, is a little bit over with, but we still have several intriguing reports after the close today and after the close tomorrow that a lot of traders will be watching. One of those that's after the close today is FSLR. It's one that Mark Sperling highlighted his trade idea of the week a few weeks ago. It's been a little bit lethargic. It was a little bit weak today heading into the report. Maybe some people that have enjoyed gains in that stock this year, taking some profits a little bit, being a little bit more cautious ahead of the announcement. We can take a look at the chart, and then we'll take a peek at the after hours for fun to see if we can get some initial reaction from FSLR earnings if they're out yet. But like I said, it sort of broke above this upper level here today. Nothing too extreme. It closed off its lows, so just some typical type profit taking that you see sometimes in the earnings reports. Let's go ahead and take a peek at the 5-minute after hours, see if we can get anything on earnings for FSLR. Doesn't look like they're out yet. We get our correct time template up here. Go 24 hours. I take that back. They do look to be out, and it looks like FSLR is lower on the report, trading right now around 44.75. So go back to the daily chart, give us some context on that. Not a huge move for a stock that has a lot of beta, a lot of volatility like FSLR. So be interesting to see whether that area is where FSLR ends up when it opens up tomorrow morning, or whether it can bounce back and potentially trigger a squeeze if the report wasn't bad enough to trigger more downside. But something we'll be watching for. Another one after the close today, Zillow. These real estate web applications have been on fire. Trulia came out with nice earnings. And then Zillow also got a big boost from the fact that President Obama is going to be hosting a real estate Q&A via Zillow, in conjunction with Zillow, tomorrow at 1 p.m. Eastern Time. So when that news came out, it triggered a big move higher in Zillow. A lot of good publicity for the stock, for the company. It's an application that I love to use when just looking around at real estate, and I think it definitely has a big future in that market. Real estate's one of those businesses that hadn't really caught up to 21st century technology, and I think Zillow and Trulia are pioneering that development of the real estate segment as far as technology goes. We'll take a look at the 5-minute, see if that one's out. Looks like it's thin after hours here, maybe a little bit lower, but not sure if the report's out. Obviously, don't have access to all my websites and stuff right here. But tomorrow after the close, we have even more high-profile announcements as far as stocks that we've been watching really closely. Yes, the meat of earnings season is over. A lot of the big cap tech names that everybody watches are done and reported. But then you have the Elon Musk stocks both reporting after the close tomorrow. So that'll be a big focus probably tomorrow during the session. And then in the following day, the reaction to those earnings will be something that I'm sure Mike Lee, Steve LeVay in the Momentum Trading Room, those are the types of stocks they'll be watching. These big short floats, high beta, high volatility stocks leading up to and after their earnings announcements often have really nice volatility that those guys love to try to take advantage of. We take a look at the chart of Tesla. What an impressive run it's been. I started talking about it down in the $40 area as one of those stocks with a huge short interest that I thought could have a big squeeze. And lo and behold, they got some momentum and caught some traction with some earnings reports, and it's triggered an even bigger move than anybody could have imagined, I think. Definitely, I didn't expect to see it near the $150 area, but this is what can happen with stocks that are highly shorted. And I've talked about this several times over the past few months with Tesla, is that these stocks with huge short floats, they can go further, faster than you can ever imagine. Sometimes it's worth, Scott talks about trim and trail. It's oftentimes worth trying to take a flyer on some of these and holding your position a little bit longer to see if you can get a little bit more juice out of them. And this has been an example, obviously hindsight's 2020 on that with Tesla, but it's one that even though it has run a long way, the psychology would tell you it's hard to chase up here, but still has a big short float. When it breaks above key pivot resistance areas, it can squeeze more, but then everything's going to be predicated obviously on that earnings report tomorrow. Could trigger another squeeze, could trigger a big sell-off. Either way, it's going to be volatile leading up to and after that earnings announcement. Solar City, the other Musk stock, we can take a look at that chart as well. It tried to break above this little pivot from early and mid-July yesterday with a nice move, but today it was rejected a little bit as people a little bit more cautious heading into earnings. They're not just snapping it up and shorts aren't on the run. They really want to see whether Solar City can confirm some of that recent strength with its earnings reports. That's been one of the big things with Solar City in particular, is that the fundamentals with that stock just don't seem to match up with the current price levels even close. But they have an interesting solar business model. They lease their solar panels. So people are betting that in the future, and also with their association with Tesla, perhaps they can have a big part in solar-powered cars and batteries and things like that. So that'll be very interesting to see what kind of number Solar City comes out with tomorrow. And like I said, with Tesla, it'll be one that'll be a focus for people like Mike Lee, Steve LeVay in the Momentum Room. Today, going away from earnings so much, IBM finally got some weakness after it was downgraded by Credit Suisse, I believe. So IBM is one that's a really interesting case to me. It's one that's been so strong for so long, but it has a really firm uptrend in place, a decade-long trend even. And we'll go ahead and take a look at the chart of IBM to give you an illustration of what I'm talking about. This is one that Scott, in his 2013 predictions, Scott, I helped him put together the post. It was a very bullish thesis on 2013, which has obviously come to bear with the really bullish price action that we've seen. But the one he listed cautiously or as a potential short candidate was IBM. And it wasn't one that he said, blindly look to short IBM, I think the stock's a lemon, blah, blah, blah. It was basically that there's been this really steep uptrend in place over the last several years, and even going further back than that, you zoom out, you see this incredible strength from IBM. But since 2009, it's been in a really strong uptrend. And when you get a break of those uptrends, it can lead to some corrective type action and some really harsh corrective type action. And there's been some very cautious commentary from various wirehouses over the past week or so since IBM earnings, people that are cautious on their growth possibilities and things like that. And I know CapEx spending, there's that whole thesis that Jill Malandrino from The Street has harped on here regarding IBM. But I think they're running out a little bit of momentum, especially after that big run. It's priced, I wouldn't say for perfection because it's had a little bit of a pulling off highs, but it's priced to perform really well and really have bullish commentary from all over the street, and people are starting to sour on it a little bit. You have an upper level floor here in IBM that I think is really worth watching. This is on a monthly time frame, so this is zooming out a little bit further than we oftentimes do here. But you zoom out, you look at this little mini uptrend or mini floor that you have here since the beginning of 2012 on IBM. If that breaks, you could definitely see some momentum to the downside in IBM. Take a look at the daily chart too. And this is the line I drew on the monthly chart, so you can see that it was knocking on the door of that today. But on a daily chart, you saw it had this little ascending channel that broke down below, in large part thanks to that downgrade today by Credit Suisse. This is one I would keep on the radar as a potential short setup. It's not one you short blindly. You don't short anything blindly because it's a difficult thing shorting, especially if you don't have anything, you're not basing your trade off of any price levels, but want to keep on the radar. If the market does roll over, I think IBM could show some relative weakness and really be a good short candidate even after today's gap down. But a couple news-related stories today. You had EBIX came out. There were reports of an investigation into the company for potential money laundering. And this was one that was a focus. I keep talking about Mike Lee and Steve LeVay's room, but they excel at taking news-type plays and trading them short-term. That's their bread and butter. They look for volatility, and they're very skilled based on their 15 or so years of experience in the business at maneuvering those short-term stocks. And EBIX today, like I said, reports of an investigation about money laundering. The stock was already crushed recently, probably on earnings. I don't follow it that closely, but huge down move, and it's been in this tight channel ever since then. That news came out today, triggered a huge move lower in EBIX. Catching falling knives and buying news plays is a little bit dangerous, but if you're able to trade a level versus a level on a short time frame, sometimes these can be really successful trades. And I know people were playing it a little bit in the virtual trading floor. It was reflected in the virtual trading floor today that some of the T3 Live contributors were looking at and playing EBIX. So just an example of an opportunity and a reason why it's valuable to be in the virtual trading floor, to be in a room like Mike Lee and Steve LeVay. The news is out there for everyone, but to be able to sort through it and to be able to potentially maneuver these stocks that are in the news, having some professional guidance like that is extremely valuable. So people who aren't in the VTF watching this video, I'd urge you to take a free trial to the Momentum Room, to the main VTF. Really great stuff going on in there the last few months, as there's been really a lot of stock-specific action, and everyone's been really quick to provide really good commentary on that stock-specific action. Another one today that was down big on some news, JCPenney. They have well-publicized struggles. They've been burning through cash. They had the former head of the Apple stores come in and try to overhaul their model from a discount model to a low prices all the time type model. Didn't work. They're trying to go back to the coupons everywhere. My mom, for example, when I was growing up, she was a big JCPenney shopper because she had 4 kids and was always looking to get deals on clothes, cutting out coupons from the newspaper and going over to JCPenney. They lost a lot of those customers when they went to this low prices all the time model, the psychology of it, whatever you want to say, and they're desperately trying to claw back and regain those customers, but they're not doing a very good job of it right now, and they're burning through cash was basically the report this morning that triggered the big down move of JCPenney. You can take a look at the chart here. And this is one that I was just talking to some people today. It's not one that I was interested yet in trying to buy the dip or catch a falling knife, whatever you want to say. I do like a contrarian play every once in a while, but I think they have to be really extreme to be compelling. Something like EBIX was extremely extreme intraday on that news, huge sell-off. if you trade a level versus level short-term type of stuff, you get involved there. But JCPenney is one that did trade well off its lows today, as I think some people took that approach that I was talking about of buying some other people's pain. You have some big funds that have been involved in this, some really well-respected people that have been trying to accumulate positions in JCPenney for a big snapback, but the company just hasn't gotten traction. It's down here breaking below a huge long-term support level back from 2009, and you have to go way, way back. I'm on the monthly already. You have to zoom out on the monthly to even get the next, that's back from 2000 is the next support level for JCPenney. So the company is in a downward spiral towards bankruptcy. Yes, they're trying to raise capital in various ways and stuff like that, but they're burning through their cash supply. It's one that's in a lot of trouble, but another one that you could take potentially a level versus a level approach and look to have a contrarian sort of view. Something to keep an eye on. It's definitely a very professional, high-level type of trade trying to play something like that. Something to have on your radar is just another example of something you can have a little different approach to besides just buying leaders and breakouts. But that is our bread and butter, looking to the strongest stocks in the strongest sectors and looking to play breakouts in those stocks. But the one more thing I want to mention is stuff in the ags today, especially the fertilizer name, CF reporting after the close today. You had some news today, not sure the credibility of it, that Russian potash producer could be looking actually not to exit the cartel that they're supposedly exiting. That news drove the prices of stocks like Potash of Saskatchewan, POT, IPI, Intrepid Potash, and Mosaic. It drove those stocks down huge, as much as 25%, as the breakup of that cartel is talked about as that it could potentially reduce potash prices by 25 to 50% due to an increase in supply. You had some reports out today that maybe that cartel is not going to break up. Those stocks saw a big spike, but weren't able to hold it. So something to keep an eye on is those fertilizer names next few days. We'll take a look at the chart of CF, and we'll take a peek after hours. So that's always fun to see the reaction to earnings. But CF had that big move up after Dan Loeb of Third Point announced that he owned a stake in it in his quarterly investment letter. It's nice to be an investor and buy a position in the stock, and then once you disclose that position, the stock goes up 10%. But that's a whole other story. The stock has given back a lot of those gains due to the fact that cartel could be breaking up and the Russian producer could increase supply. But we'll take a look at the 5 minutes, see if we've gotten any reaction after hours of earnings. It doesn't look like it's out yet. Some prints higher here, but really thin, so it doesn't appear that the report is out yet. I'm pretty sure earnings are after the close today. So something to keep an eye on. That'll definitely be a sector that remains in the news and remains a hot topic, especially as we get some earnings in the group. So like I've talked about, there is very slow action. The tape is very thin, and you talk about the indices, but there is some stock-specific action surrounding earnings season, surrounding news. There seems to have been a lot of individual stock news recently, so if you're going to sit in front of your computer, being in the VTF, extremely valuable. I'll say that again, and monitoring the news wires. Besides that, earnings season is drying up a little bit. Like I said, the meat of earnings season is ending. A lot of the interesting high beta names that we've been following are reporting this week. So over the next few weeks, the action could get increasingly dry, talking about a stock-specific perspective, as everyone anticipates that September QE Fed rate decision. So one more thing, we have a great webinar series that we've been doing the last few months that I think people are really loving. We had one, Mike Lombardo had one last week. He's the head trainer of the PDP program. Great webinar last Thursday that got really nice response. We had another one from Rob Smith where he introduced his strategy to more of the community. Next Thursday, we have the latest installment of that webinar series. It'll be with Rich Annunziata and Evan Lazarus, who are who are the mentors in the T3 Live Active Trader Mentoring Room. And they're doing a webinar basically on the T3 Live methodology that they teach in the Active Trader course, giving you a window into that, a window into what they teach in their mentoring room. Should be some really good education, as well as a chance to see if the Active Trader course and mentoring room is right for you if you haven't been a part of it before. It really teaches you the foundations of being a trader, as well as some more advanced proprietary strategy type stuff that has been really giving you a good roadmap to the market over the last few months, as the market's been trending really well. And a lot of the strategies we teach are trend following strategies as well as some capitulation type strategies that would allow you to trade stocks that have those big news releases, and you could potentially play a level versus a level. There's some capitulation type setups that they teach in that course that'll be covered in the webinar as well, using some recent examples. So should be a great webinar. You have nothing to lose. It's free, completely free, so definitely sign up. The link to register will be in the article below this video. But thank you for joining me this afternoon. This has been John Darsie for your daily recap. Have a good day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.